Hope y'all are doing well today. This is Chasemcpheeters. I am the Stock Sherpa on YouTube, professional portfolio manager for Everbullish.com. And just a giant congratulations. I put a little bit of clickbait there at the top, which is sell NVDA. And we did do that. We sold NVIDIA. So if you remember at the end of the week, I go over some of the trades that I encourage and recap some of the housekeeping and all the cool lessons. So this is just a Friday post about what we accomplished this week, as well as just some positive shit going on. That's it. So we'll start here. Housekeeping bulls, portfolio clients in particular, congratulations. We just finished and sold out of the last positions of the portfolio. So one of the things I do at Everbullish and that I've learned to be the best is to calendarize the year with extra emphasis on certain parts. And I'm not a sell in May and stay away kind of guy. Nothing too rigorous about like option expiration dates or anything like that. But I have proven time and time again, and to my clients' benefit, basically, that if you sell out in December, typically around the 10th, and then you see what happens with the Santa Claus rally, which I'll be making a post about that too. But it's basically from the 10th to just after the new year, and I can get data that's sensitive enough to know where the market's going based on those first couple of days of trend setting, as well as some historical stuff on the old Santa Claus rally. So all that Santa Claus rally means is certain data is going to hit or it's not going to hit, and that's going to determine the direction of the first quarter of the year. So we're waiting on that. But again, portfolio clients, 53% return on an all-stock portfolio that typically held some cash. We did it through superior stock picking. We did it through sector rotation strategies. We did it through my methods and the Everbullish methods. So right now, you can go buy the portfolio for next year. As of the 1st, the 2025 portfolio, it's built. I'm still working on it. I want to see some data, but I'm going to have that emailed out to all the clients who purchase it, and the price is going up to $300 per portfolio because the type of returns we're getting have been completely justified since we were $75 and just raised the price. Each year we beat the market by over 10%. So it's bold claims, it's big talk, and it's the real deal. So a couple of the things I want to put on here each December, well before Christmas. We sell out and we buy into the portfolios. So next year's portfolio that you can purchase in the second week of Jan. I think it's going to probably be Jan 15, but I'll have it emailed well before that. And this allows me to watch the necessary calendar indicators and take Q so we can figure out what's going to go Q1, because we're going to get out of this thing in Q1 by February or March. I want us to be up big. I want us to be up 5, 10, 12% on the market. And we can do that by picking the directions. But just to highlight what we did here, and I love this for the people that are diehards, is that in the Substack, you go look and go back to the portfolio synopsis that I put out in March or whenever of this year. And you'll see me saying the same thing. So this proves a lot of the consistency and just a great record of how I do it here and the way we manage portfolios. But so what I said here is that we manage risk through holding cash. A lot of folks will say, I want a hedge fund. I want to go short some things. I want to go, run a long and a short 60-40. It really doesn't work. Not in straight up markets like this. I mean, the market has been directly up for the last 6.5 years with no sign of stopping. So we said that, cryptos are going to do well. The only one we messed with is Bitcoin, right? So we had Bitcoin in there. We also had Robinhood. We also had SoFi. So that's kind of the financial / personal disruptive technology, consumer tech. And straight up, man, I love doing this. I love posting this, but we got out of CrowdStrike. I told you guys that was one of my favorite stocks on the whole year. We made a great return in the first 3 months of that thing. And then in mid-June, it comes out that they just screwed up big time. Well, that's when you sell it. Other portfolio managers weren't selling it. They don't care enough about your current returns to do that. All they did was they may have pared some of it down, or just lowered the weighting that they had. But, fact is that these people, these big firms and these mutual fund companies and any other trader besides me or anybody that ever tells you besides me Once a stock starts going bad, get rid of it. Don't keep allocating this mindless resource in for sake of diversification, right? So yeah, you can go back and look where we cranked that one. I believe that was at that was at 129. So we sold at 129. The other day I was looking at it, it's like 80, right? So this is just common sense. It is this easy. And, you know, crypto rallied at the end of the year. We over adjusted in October. We went down from having 17 stocks to just 10 stocks. And, you know, we had Bitcoin, we had MicroStrategy, we had Riot, we had a bunch of cool shit in there. That's like, now we know the direction. Let's just keep going that direction. And we crushed it. And listen, I've never done this, guys. I'm putting this up here because it shows you exactly what we owned as of October through the end of this year. I'm proving it to you guys. It's all right here. And how easy was it to just pare it down? This is 20% cash, and everything else is in the 8 best stocks with an equal weighting to basically, you know, carry the football across the end zone and score, baby. That's what we did. So it's your time. Love for you to go buy one of the portfolios, buy all the portfolios. Up until January, they are going to be still the $200, and you can lock that in forever if you go buy one. So I don't know why you're not. The trading content is great, but the portfolio management content also just does great and pays the bills. So come be great. Let's make money. Let's get rich, and all while you're learning it. So the final result was 53% versus the S&P 500 being at 29%, which just we all know this is absolutely crazy. This doesn't happen often, but it happens a lot, and it happens a lot more than you think. And these type of excess returns on top of very, very good returns already, it's how we crush it. It's what we did. I'm writing the book about Everbullish and the strategy. I'm trademarking it, and we're not going to stop till we get to the top. So come on, join me, and let your 401k and your IRAs and your brokerage accounts and, you know, the things that you live and work your whole life for to grow. And, you know, the point is not to stop thinking about that. It's to make them grow so you can go live your life. So Chase, Everbullish, go to my portfolio store, buy one of the portfolios. The Everbullish all stock flagship is the portfolio that I typically refer to and tout, but I have a balanced, I have a growth with income / dividend. And we also have a money back guaranteed Fidelity stock selector 4 that I've created on there. And I've got all the good stuff you need. Thanks for being with me. The content for the rest of the next couple of weeks will still be trading content. You don't have to, you know, this was an idea, and this is telling people, hey, get out if you're going to jump on board next year and keep those big returns and, you know, put the baby to bed for a second. And I'm still going to be making the content roughly pretty much daily going forward. So, you know, love you guys. Appreciate you guys. Can't think of much else to say, but